A lot of people in sort of pop culture thinking that this could be the end.
Yeah, so well, the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.
And we are live from around the world and across the web, stepping out of the echo chamber and inviting you to go beyond the block. New live stream. CEO and founder Monty Greenspan, Quantum Economics, Quantum Expeditions, Cora Finance, and more. It's kind of fun. We decided to get together and hop on a live stream. Everybody's doing it. And we figured, well, we should probably jump on the trend as well. So it's going to be kind of fun. We're going to take about 55 minutes or so and go through some of the markets, some of the headlines, and your opportunity to ask the advisor. So if you've got questions, comments, or you just want to pop up and say hi, you're welcome to do that as we try to get this thing going here. Early on the West Coast in the U.S., and it's in the evening where you're at, Mr. Greenspan, correct? So it's kind of like an AM, PM type of thing we got going on.
It is AM, PM. Where do we share out the show? Because I don't see it on Twitter at all. So how do we send that out to
everyone? Live right there on the Quantum Economics channel right now.
On the Quantum Economics channel. All right.
Yep, right there on Quantum Economics live. You'll see
give that one a repost.
Yeah, give it a like and
hey, all you yappers, go ahead and please share this out. I'll be very happy to retweet the first few people who share out this thing. Let's get 1 million people listening. I think 1 million people is a good KPI. What do you think?
I'm all for it, man. I'm all for it. So let's kick it off with the big boys. The S&P 500 and the NASDAQ hovering near record highs already. Mixed earnings report and cooler inflation data. Calm but cautious trading in big names like JP Morgan and Delta just kicked off earnings seasons. And tech, I don't know if you've noticed this, but tech is on fire. And Alphabet, our friends over there at Google, just hit a $4 trillion market cap. Well, they're not really our friends. I knew a guy who worked there, so it's not really a friend. More like an acquaintance, really.
Well, Google is a friendly company, right? They're everybody's friends, aren't they?
Yeah, I think so. So the vibe, it seems to me, I don't know from your perspective, but the vibe seems a little shaky thanks to the headlines, especially concerning the Fed. I mean, that was the one I think that caught a lot of people by surprise. Jerome Powell, give me your thoughts on that really quick. I haven't had a chance to sit down with you regarding Jerome Powell and his comments that came out over the weekend in the video. And we can share that whenever you want. Just let me know.
Yeah, you want to go ahead and, I mean, I think that this Jerome Powell's comments on Twitter yesterday were explosive. I mean, this was literally, I mean, it's like, maybe to be fair, he's being indicted. And so I suppose he's going to want to, defend himself in any way that he can, including, what he did. But I think that it's prudent for everybody to just kind of see what's happening. And yeah, definitely people who are watching, please share out this video. We'd appreciate it so we can get more people watching. But let's go ahead and let's take a look at Jerome Powell's video, I think in its full glory here.
Yeah, I'm just pulling it up here. I'll
it was all over Twitter yesterday, and I think that this really bears discussion.
All right, here we go. Here's Jerome Powell.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
So there's Jay Powell right there. His comments. Give me your thoughts on it, man. This seems rather unprecedented. We've never seen anything like this before, right?
That is a nuclear explosion right there. It is literally a political nuclear explosion. And so what's happening here is the Central Bank of the United States, or the Federal Reserve, is basically a banking system within the government. And I mean, we've been talking about this for years. It should not exist. And it's basically like the banks being able to control the government and the government being able to control the banks. And it's basically like an intermediary between them. It is not what's happening. What happens there on a day-to-day basis is not capitalism, and it's not democracy. It's a bastard. And so the only way that the Federal Reserve can maintain credibility is by continuously stating that they are apolitical and that they don't follow politics and that they don't engage in politics, and they just do whatever is in the best interest of the economy in order to fulfill their mandate of keeping maximum employment and price stability. And so what is happening here is, first of all, yes, he is being persecuted by the Trump administration, right? They're bringing charges against him, and I don't know, like I don't want to weigh in on politics here, but just to give the backstory, they are now renovating a building, the Federal Reserve building, for $2.5 billion, and so, just that alone should raise eyebrows. Like, why does a building cost $2.5 billion to renovate? And then so Trump is asking questions, and the accusation here is that that Jerome Powell lied under oath about specifics of the building. Now, whether he lied under oath or was misleading in his commentary, that remains to be seen. We don't know. But just the fact that they're having this conversation is extraordinary, and it basically shows that the Federal Reserve cannot remain unpolitical in their stance. It's a physical impossibility. And so Jerome Powell now coming and he's accusing the administration outright of not persecuting him because he lied under oath. He's saying that's just a pretext. What's really happening here is that the president is mad about the way I set policy, and he's coming at me from different at any angle that he can in order to get to me personally. Now, is it true? Is it not true? Again, I'm not going to weigh in on politics here, but the whole fact of this discussion, this discussion is even happening, is basically it's showing the paradox, right? It's basically making the paradox: is the central bank political or not political? And here is basically saying, yes, it is political. It cannot not be political, right? Because the president wants interest rates set one way. He's trying to put pressure on the Federal Reserve to set them, and the Federal Reserve is now they have to respond to those politics. In any way, shape, or form, it's just basically exposing the hypocrisy of the entire institution.
I don't have a real economics degree like you. I got my economics degree from Nakamoto University online, and that's funny. You can go ahead and laugh at that. But
No, you're good, man. You're good. I'm happy to answer any questions. If that's stuff like, I understand that this kind of can go over people's heads, so I'm happy to
well,
linger on it and make sure that it's clear
I
for
guess
everyone.
my only question is like if it's not if their whole pushback is it's not political and they're not trying to take sides, then how do you explain the rate cuts right before the presidential election? It seemed like that might have been trying to favor the administration that was currently in office at the time. And that was the only time that they did that. So to me, I find that there's a little bit of confluence there that like, I don't know.
No, you're absolutely right to point that out. And we've discussed this on our spaces several times. I think we had one guest on who says, yeah, I mean, Jerome Powell is part of the deep state and part of, you know, the old administration. And he has a very left-leaning politic view and actions. And some people, that guest, and I kind of agree with him. Obviously, again, I don't want to be too political here, but Jerome Powell does seem to have been working against President Trump from the get-go, and so you could certainly make that argument, and this is why, you know, it could make the case that this is why this situation is now coming to a head from the beginning. And so my point is that it's impossible for the Federal Reserve, given their position, they are a branch of the US government, to not be political and not respond positively or negatively to the presidency. Whether or not, you know, Jerome Powell, I mean, we can't really prove, like, but you bringing up that specific case, well, yes, they lowered interest rates just before the election. That could definitely be due to political motives, and it, on the face of it, it seems like it is. But the Federal Reserve's credibility hinges on the fact that they're not political, and so even when they make these political sort of moves, they still try and cover that up and cover up their poop by saying, oh, but we're not political, right? And so they can have, they're playing this kind of game where they do something political, say it's not political, and then, you know, most people who don't really understand, you know, the nuance of the situation will just say, oh, but they said they're not political, and then, you know, they can maintain their credibility. But this situation is basically just exposing the lie for everyone to see. I mean, my tweet yesterday about this was basically, look, you got up and you said, I'm not political, but, and then you lobbed a grenade, right? A political grenade. So you're saying you're not political, but you're doing things that are extremely political. So yeah, it's basically exposing the lie of the institution. I think Eric Voorhees had an amazing tweet on that. Voorhees is one of my heroes here.
You got something you want to share there? Yeah, go ahead.
I see if I can find it first, but yeah. Yeah,
because I've always been of the mindset that I thought that the Fed was not actually an official part of the government. It was created by Congress, so it's a creature of the government, so to speak. But in no way, it's not part of any of the three major branches, like the executive, the legislative, and the judicial. You've got that there up there. Okay, awesome. Let's.
Yeah. So let me just ask you, who funds the Federal Reserve, right? When they pay $2.5 billion for a building, whose money is that, right? And then secondly, who appoints the president of the chairman of the Federal Reserve? Who appointed Jerome Powell to begin with?
That was Trump.
I believe, was it Trump?
Appointed. Yep, Trump appointed him.
The point is that it's the president of the United States who appoints the chairman of the Federal Reserve. And then that person, I believe, needs. I'm not familiar on the procedures, but I believe they have to be confirmed by Congress as well.
Yes, they have to be confirmed.
And so that just means this is politics. This is a political position. It's a political appointment, right? And the fact that this paradox is allowed to exist from the beginning is in fact what's under scrutiny, and should be what's under scrutiny at the moment. And here, let me read it for you from Mr. Voorhees. Fed independence is a myth, a story. It is the moral cover which justifies its grotesque state-sanctioned near monopoly power of the most important market in the world, money. The Fed is never independent of banking establishment. It is of, by, and for the banks. The Fed is the banking establishment's greatest accomplishment, and because of modern banking is an appendage of the state, so too is the Fed its most potent tentacle. Nobody should really care about how much the Fed spent on its building renovations. What a distraction. The Fed's crime is not an embellished construction project, but the semantic coercive distortion of money rates across the global economy for the past century. And so that's just like put things into perspective for you. Bam.
Man.
Yeah. That's what it is. This is to me, it's exposing the lie in the most clear way. Is the Federal Reserve now, if you ask anybody, given yesterday's shenanigans and public display, is the Federal Reserve a political institution or not? Yes or no?
Let me ask you, what happens? What would happen to markets, to the economy, if they really did dissolve the Fed? If there was something that we've heard this abolish the Fed and the Fed, we've heard this narrative time and time again. I think I've even tweeted it out in years and like, end the Fed. But let's really unpack that. Walk us down what that would really look like and how would that play out in everyday's life. I can't think it would be a good thing right away. There's going to be some pain, I would imagine, right?
That is an amazing question. And, obviously, who knows, right? We can't really understand what the steps to that would be. The first thing that you would want to, that you're worried about is the Fed's massive balance sheet. I'm going to bring up a chart of that right now. The Fed owns a lot of assets, mostly government bonds. And here we can see it, 6.5. Yeah, I think it's $6.5 trillion here. And so that's a lot of assets.
Mm-hmm. It's a lot of assets.
And so what would happen? Oh, look, there's a little tick up. They've been naughty. They've been winding down.
Look at that, yeah.
They've been winding down over the last few years since 2022. And just to look at that little tick up. Yeah, I think that was Jerome Powell's silly attempt to keep his job, but that's not happening. In May, he's going no matter what. Trump is gonna appoint. His term is over. Trump is gonna appoint the new Fed chairman. But to answer your question, like, obviously, to me, ending the Fed, and to you, I mean, you've tweeted out. I think a lot of people have kind of weighed in on this. Would be an amazing thing for the economy long term, because it would return sound market principles. And so the Fed is basically a bastardization of capitalism, where you now have a central authority who is not democratically elected, or they're only democratically elected by proxy, who basically makes unilateral decisions over the economy and setting interest rates. Interest rates should be set by the free market. That is how capitalism is supposed to work. And so when you have free market authority, I've seen a few crypto projects, right, who try to set up, capitalistic systems where you can set interest rates. So we had a brief partnership with Unfederal Reserve, which I thought was quite amazing. They were trying to allow free markets to set interest rates, but obviously they don't have the governmental authority. So that's the Fed's secret weapon, is they have the unilateral authority granted, by Congress and by the President of the United States, by all three branches of government, who basically enforce their autonomy over the economy. And so they're allowed to just print money out of nowhere. They're allowed to just inflate their balance sheet. deflated as they wish. And I mean, to me, that's a crime. But dismantling the Fed is not an easy job. And I think that in order for that to happen, I think that there would need to be a clear mandate for somebody to do it and a clear plan. I don't think that, President Trump, with everything that he has going on, could suddenly get up and say, "Hey, let's end the Fed." That would be incredibly weird, dangerous, and irresponsible. He could do it. He might do it. Dude.
Hey, man, you never know what's going to come out of his
Yeah,
mouth. You never know.
really. But to do it in a responsible way would be, you'd have somebody like Marco Rubio or JD Vance, whoever's the next presidential hopeful, get up and in their election campaign say something like, "We're going to end the Fed," right? And once somebody gets elected on that platform, well, then there's a clear mandate for it. And then you could enact, a congressional plan to dismantle it with minimum impact on the economy. And that would be the right way to do this. Obviously there's a wrong way and a right way, but any way in my mind would be a good way. Let's get rid of this centralized authority who, for all intents and purposes, has been responsible for the 2008 financial crisis, and all of this, the 2020, 2019 overprinting, and the subsequent inflationary crisis that followed. That is all squarely on the shoulders of the Federal Reserve. I mean, they're manipulating the economy in a way that it just shouldn't be manipulated. And had the free market been allowed to operate in a way that it should be, none of that would have happened.
How does this end then? We know that for sure it's going to end in May. He's going to be gone. But between now and then, do you see any possible scenarios where this could blow up? Where, obviously there's a difference between an indictment and a subpoena. And I think people need to be very clear about what that is. And if you don't, well, then thank God there's Grok or ChatGPT, and you can hop on and figure that out. But I don't think it's that point where, oh my gosh, this is going to end in a disastrous wreck, in a car wreck for the Powell or for the Trump administration. But I'm just curious, how do you see this thing kind of playing out between now and the time that Powell does leave office?
Yeah, you're asking if it could blow up. It already did. It really, literally, it already did. That tweet yesterday was absolutely massive. I mean, that was just I think that's probably one of the biggest political nuclear bombs I've seen in a very long time. And so for the Fed to come out and accuse the administration of lawfare, whether or not, and again, maybe they were involved in lawfare, who's to say? But that public accusation is a bombshell. And where could it play out from here? I don't think anywhere good. I mean, the tendency for these type of things is for each side to dig their heels in, and I think that it could certainly lead to a very bad place, and undermine the Fed's credibility while they're still in office, which would definitely lead to market turmoil.
Yeah, and I don't think anybody wants that. I don't think the administration wants that, especially as we move into midterms this year coming up. And so I think that caution is the word that should be employed here. Let's be cautious. Let's be careful. Let's not make any rash decisions, because there's going to be some consequences at the end. And I think there's a lot of unforeseen consequences, maybe that people aren't factoring in. And this is where I always try to go, like, what are those unforeseen circumstances that people aren't talking about that maybe we should be looking at, we should have on our radar? I'm not a big Donald Rumsfeld fan, but the quote, it's the unknown knowns, or the unknown unknowns that we don't know, right? However he said that, to paraphrase him. But that's where I'm at with that. Anything else on Powell? Do you want to put a bookmark in that and move on, or do you want to just?
Yeah, I think keep an eye on it, because it's definitely worth watching. But yeah, let's take a look at Well, what's next on your agenda, sir? I don't want to.
Oh yeah, let's see here. We can cover Bitcoin. You want to cover some Bitcoin? Obviously, people love the Bitcoin. We're talking Bitcoin a lot. We're involved with Bitcoin mining as well. So let's take a look at the Bitcoin chart. What do you see as far as, because for a long time we were held in this channel of resistance. It seemed between about 80,000 and 90,000, and we pushed up a little bit. Let me pull up Coin Market Cap. We're at 93,105 right now. So again, still kind of in that channel. If you were looking at the charts right now, and not financial advice by any means, but maybe some life suggestions. But when you look at this chart, and you're looking at Bitcoin overall, give me your assessment of the asset right now, and how would you be looking at this? Are there any indicators, market structure, or even structure on the chart that you would be looking at to maybe that this might be concerning? What do you think?
Yeah, absolutely. Got my chart up as well. If you want to
Oh
change the
yeah,
cat
sorry, I didn't see
videos,
that. Yep.
you're
Yeah.
good. And I think this is a natural segue, right? Because Bitcoin is often seen as, a hedge against the Fed. And so uh, if the Fed's credibility is currently being undermined, then yeah, Bitcoin seems like a natural solution
Yeah.
for that. This is a very long-term chart, of course, and we had that upward channel. That upward channel seems to be broken now. I think the critical support lies around 73,000. But we could also see this as a kind of range that's been happening. I think you mentioned between 70-ish, 80-ish, right? And so this
Yeah.
kind of flat sideways channel. And so, yeah, certainly I think, if the point is buy low and sell high, and you believe that, there's very strong support around 73, 93, I mean, makes sense, especially considering the consolidation that we've been seeing lately has been towards upward side. And so let's just zoom into the daily chart over here. I think, yeah, today has been very strong. Yeah, we're up almost 2.5% today. And what seems to me is that, the lows have been getting higher. We have higher lows. Here's a low. Here's a low. We see the lows getting higher, and the highs getting higher as well. So higher highs right here, 3 in a row. Some kind of dip, but not penetrating downward. And then here, look at that. An attempt to break out above 94 was rejected, and
Mm-hmm.
it looks like we're testing that 94 level again. Can we break significantly above 94, 95? If we can do that, then it's off to the races. Then we see, people zooming out again back towards the weekly chart and going, hey, how high can it go? And then, the only real resistance beyond that point is the all-time high at 126. So, yeah, my opinion, everything that's happening with the Fed right now, and for those of have been watching the situation in Iran as well,
Mm.
Bitcoin is certainly seen as a savior to both of those huge geopolitical scenarios right now.
Do you think? How do I want to phrase this? Do you think that Bitcoin is still, I guess, I hate saying this, do you think it's an alternative asset, or do you think it's a macro asset now? Has it really kind of, I would think with ETFs, it's probably now more of a macro asset. It's not an alternative. How are you viewing it, and what's your sentiment on the market on that?
Semantics, man, those are semantics. Certainly, Bitcoin and the top altcoins are now traded much more by institutional players. And so it's much less of a fringe asset. And I think you're asking for the specific tipping point, right, between
Mhm.
institutional asset or retail asset. And I think it's going to be very difficult to judge exactly, when that tipping point is, or if it's already passed. It may have already passed, to be perfectly straight. But what I can say is, especially like for some of the altcoins, it definitely feels like um we're trading in a much bigger pond now. And we've seen a lot of situations where there have been very strange patterns drawn on the chart that seem to indicate very large players kind of pushing the price around on purpose in order to push out leveraged traders.
Mm-hmm.
And so when you see like a false breakout or, a huge run up only to be, completely decimated unexpectedly, I mean, these are not things like right over here, for example, right? You have this kind of huge run up, and you can see like when these things are happening, um, and especially like on the weekend, right? This was a Sunday or a
Yeah.
Sunday, Monday, and so people start piling on the leverage right about here, saying, okay, and people getting very bullish on Twitter, and you can see the sentiment like on Twitter very clearly. And then to see that completely reversing, and not only reversing back to the starting point, but even taking out
Yeah.
anybody who would have even opened a leverage position at the low, right, is
Yeah.
now completely gone with that wick down. Same thing over here. I mean, this is like very classic leverage trading, or running stops, right, is what it is people trying to get the leverage traders involved and then taking them out. And this is like indicative of we're now a guest in somebody else's pool, right? And so they own the pool, and we're all just swimming in it. And then at any point they can change the temperature or even just blow the whistle and say, "Hey, everybody out of the pool," right? And so we've got to, anybody who's trading on leverage is already probably aware of this. But we've got to be we've got to be cognizant of that when we're making our trading decisions. I think for anybody who's not, a seasoned trader in this environment or not willing to, run a few stop losses,
Mm-hmm.
probably best if you stay on spot for now. Hold, hold Bitcoin, for long term. Hold your
Yeah.
altcoins. Dogecoin at 14 cents is not a bad deal if you're thinking about it over the next few years. Um, but yeah, I mean, I would say like don't start chasing pumps. Chasing
Never.
pumps, I think chasing pumps. Well, sometimes yes, but at the moment it can be deadly.
Okay, so walk me through that, because you and I have been friends. We've worked together for a long time, and that was one thing that I've always taken away, is that never chase the pump, never chase the pump. So when would be the extenuating circumstances around that? What would you be looking at as far as market conditions to actually chase the pump? When would that maybe be a good life suggestion?
So what I like to do anyways when I'm thinking about leverage trading is to wait for the pullback in a bullish environment. So to
Mm-hmm.
understand that it's bullish, and then wait for the pullback. And sometimes those pullbacks happen over the course of a few days. People get washed out. As long as you can understand that the environment is bullish, we're going to reverse that pullback. That's when you want to get in, so you can get in on a nice position where you have a nice entry, especially when you're looking at, those high leverage positions. You need to have a beautiful entry. And so um, on a chart like this, it's very difficult to pinpoint, right? It's very difficult to say, okay, here's my entry point.
Mm-hmm.
And so that's why I'm kind of staying out of the leverage at the moment. And so I would say once we get up to to 15 cents, right, and then we see like a pullback down to like 14.6 or whatever, say, okay, now we have a nice entry point to get in on. That's my take on it, anyways.
And that's speaking to Doge specifically here that you have on the chart, or is that just kind
I
of like
like,
maybe in general?
yeah, I like trading on Dogecoin. As far as leverage is concerned, on my go-to asset is Dogecoin because I'm familiar with it, and because I know kind of how it trades, where it likes to find its
Mm.
support, how it interacts with Bitcoin, as a follower. Um, it just makes sense to me. It's my comfort zone, basically.
You know, we've been doing our friend Matt Hatter and I, and you know, you've been on the show as well. We've been doing the Trading Tuesdays, and it's great to get a bunch of really smart traders who have been doing this for years. You know, Christopher Inks, Febo Swanee, Bits of Wealth, TradeFly, yourself, Hernan, and I've learned a lot. And I think what's kept me out from trading is a lot of there's been a lot of fear. You either get wrecked, you get stopped out. You hear again leverage, and you see these people, and it looks like from what I've been able to learn from the trading shows and from smart folks is that there are people out there, like you say, hunting specifically for those pockets of liquidity, and they're looking to take them out. Like you said, to your point, this is someone else's pool now, and we're just all kind of guests floating around in it. And to me, that doesn't make me feel really safe. And so it makes me almost kind of want to pull back and just, again, like you said, stay in spot, stack, hodl, self-custody, and just ride it out.
Yeah, that's what any self-respecting retail investor should be doing right now, to be honest.
Oh, good then. So I'm not completely stupid, just maybe just a little bit stupid.
No, man. So what all of the smart people that pretend to be smart on Twitter, they're all getting wrecked right now. I'm sorry, but they're all getting wrecked.
Oh, geez. Well, that's the one thing that I learned early on was, again, if you want to not get wrecked, you want to avoid scams. If you just stay safe, stack sats, hodl, self-custody, you're golden. You avoid the chop, you avoid the FUD, you avoid the scams, you avoid the MetaMask, you avoid all that stuff. But then you also miss out on some really potential gains on some projects as well. And so that's the downside, I guess, of it, right?
Yeah, trading on leverage, I can absolutely say that I've seen very few people who have been able to make a lot of money doing it. And everybody who attempts it loses a lot of money. So including the people who make a lot of money, they also lose a lot of money. And so people tend to post their gains and not post their losses, which is why I think Wall Street Bets was so popular. Is like people started, doing loss porn, right? We're like, hey, look, I lost $30,000 here, and people start, applauding them for that. Which, whatever. I suppose that's part of the culture. But I can absolutely say that trading on leverage, you have to go into it with the same mindset where you go into a casino and say, okay, here's my budget, here's how much I'm willing to lose, stick to the budget, and once you lose it, walk away from the table and not keep going, because if you do keep going, you will find yourself in financial ruin very quickly. So yeah, that's something that I can say. And look, it's something that I've been able to do successfully quite a few times, but also you got to know your limits. You know your limits and say, okay, this is the market for me. This is not the market for me right now. I'm staying out. I might jump back in later, but I definitely don't want to chase this pump. I mean, this pump is massive, and we say, okay, let's wait for a pullback before we join in on that. Because look, every single pump here on this chart has been pulled back in its entirety. And so, yeah, I remember this one very well. Was it like?
Oh, I remember this pump. I remember this. It was a good pump.
They called this the hold my beer pattern, right? It's like completely dumped and then completely reverse the dump. I mean, this is just like telltale signs of like manipulation, chart manipulation, and painting the chart by very deep pockets. And so yeah, you gotta watch out. And their goal is to take you out. And so
yes,
they're smarter than me. They're smarter than you. And so when they do that, maybe step aside. You wanna be the fly on the elephant's back. But at the moment, the elephant is kind of like intentionally shaking off the flies.
More than that, it looks like. And we've got about 15 minutes here left up against the clock. So I want to transition really quick into something I know that you're very, very passionate about, and something I think is going to be one of the biggest narratives for the upcoming year, and that's tokenization of real world assets. We've heard Larry Fink ad nauseum now making his big mea culpa, going, guess what? We're going to tokenize everything, and everything's going to have a QSIP number and blah, 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 blah. So this seems to be the big narrative for 2026 moving forward. Tell me a little bit about the quantum assets, real world tokenization, anything you can share on that in the moments that we have here. Share your screen, anything you want to do there, boss. Up, you're muted. I mean, we can't hear you. You're muted.
About that. Yeah, we've got quantum assets live now, and we are tokenizing real world assets, which are essentially mineral royalties. So this is a way that high net worth individuals have been earning passive income for many decades. The way it works is you buy a property, or the way it works in TradFi, you have to go out and buy a property, and you can buy the subsurface rights of the property. So you're not buying what's above the ground. You're not buying the property to build on it, but you buy what's under the ground. And what's under the ground is oil and gas. And so large companies come in, Chevron, ExxonMobil, they drill and they start producing gas. And so the owner of the land gets a monthly paycheck based on the amount that's produced. So typically around 30% of whatever they make, they're paying to the landowner. And so rich people, like, that's a great way, buy a property and then just get a monthly paycheck. And typically you're getting about 10 to 15% a year. And so, hold that for 10 years, you've made your money back, and that's generational wealth. You just pass that down to your children and they'll continue earning in perpetuity forever. It's basically, if you're instead of holding on to cash or holding on to money, you're holding on to an asset that continues to pay you. And so what we've done is we're putting that onto the blockchain. So anybody can now participate in this opportunity. So this is the quantum economics. There it is. It's floating around the globe there. If you zoom out, you'll see quantum assets floating around. There's Cora, there's quantum assets right there. So yeah, you can click on that and then visit website. Yeah, and if you visit the website, I don't know why it's not showing. I guess it's not, you're only sharing one. Maybe it opened in a different website.
Let's see. Yeah, I've got the. There we go. Let's try yours.
Yeah.
There we go.
So yeah, that's quantum-assets.io, or if you're on QE.finance, just go, find the quantum assets planet that's spinning around the globe there. And so yeah, I would urge people to go to the How It Works page, read through this. For anybody who wants to earn money off of referring people to the website and referring customers, hit the apply for affiliate membership button, and that'll get you on as an affiliate, and and then you'll have your own tracking link. Anybody who uses your tracking link and makes a purchase, you will get a percentage of whatever they've sold. And also, as far as quantum assets is concerned, it's also tied to the QE token. So anytime somebody purchases an NFT on quantum assets, we're taking 5% of the purchase amount, buying QE tokens and burning them forever. So that's causing upward pressure on the token and ensuring that deflationary coin mechanics. So yeah, I mean, it's we've talked about this like kind of in depth a lot before. I'm happy to answer any questions about how it works or the specifics, because as far as I'm concerned, I mean, crypto itself is generally very pie in the sky. Most of what you see in like DeFi and lending and staking and blah, blah, blah. I mean, it's all kind of like just shoveling shit from one corner of the room to the other corner of the room. And so real world assets tie that back into, you know, grounding, right? And basically grounds it in reality. And to me, oil and gas properties, I mean, what we found here, and especially due to our partnership with Doug, who's been dealing with these properties for 30 years and knows what to look for, what kind of, you know, how to spot the right properties, and has access to some amazing properties that are already producing revenue and are likely to increase in value going forward. I mean, that's the trick there. This is the apex of what a real world asset should be, right? Something that has consistent cash flow and is ripe for tokenization. So I'm very happy to be a part of that and being able to, you know, beat out Goldman Sachs, you know, and beat them to the market. That to me was like pretty awesome.
But this is but what you have done, and Doug and the team behind the scenes have done, is really you've actually beaten Goldman Sachs and Larry Fink and BlackRock to actually tokenizing real estate and mineral rights. Now walk me through, like, if I'm just the average retail trader, I know enough just to be dangerous, right? But I want to get in and find a passive income opportunity. I know enough about Bitcoin. I know how to send some stuff, blah, 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 back and forth. Walk me through what that process is like, and what am I doing? Where am I sending my money? Can you walk me through just a real simple, you know, thumbnail sketch of what that process looks like for the average retail trader, maybe?
Yeah, so I mean, we make it really easy as far as like the Quantum Assets website. I mean, you just go on to the properties page, and you can type in there how much you want, acquire rights, and then it'll take you through to the checkout. You can use a credit card, or you can pay in a number of cryptocurrencies. Sorry about that.
Okay. Do the different properties, I would imagine they probably have different returns, like maybe one property might have a more substantial return than another property, or how does all that work, and what's the situation on that? Like, I see you've got different properties listed here. So I'm imagining like the game of Monopoly, like, oh, you've got, you know, Innis Arden Avenue, and I've got Baltic Avenue. So maybe one property is maybe worth a little bit more, and one might have a little bit less as far as passive income opportunities. How does that work?
Yeah, absolutely. And you can see each and every one of them, what the estimated returns are going to be.
Oh, okay. Cool.
Yeah, and you can see that right on the site, and then you can see that there's a view deck button, and that has all of the details about the specific property, and you know what you can really expect by owning the NFT.
Okay, so it looks like you've got about 4 up there right now. It looks like, is that what I'm looking at? 4?
Yeah, we need to refresh because these ones are sold out already.
Oh,
yeah, and so this
well, that's a good problem to have. That's a good problem to have.
At the moment, there's no supply, so we're going back to the supplier and getting more shortly.
Well, that's a good problem to have, I would think, if you've already sold out. Yeah,
indeed.
So let me just ask you this then. When we're talking about from a retail side versus an institutional side, I mean, what's the least amount, I guess, somebody from a retail position could put in to get access to a tokenized real world asset and a passive income opportunity? Is it as little as like $250 and you can get a small piece of it, or is there a certain minimum?
Yeah, I wanted to set no minimum, but the issue with that is you have like gas fees and transaction fees, and because we're dealing with, you know, the royalties, you know, 10% a year, and then it's paid out monthly. We really wanted to make sure that there's a minimum that people can see monthly income coming in. And so if you buy, you know, $1 worth of mineral rights, and you're getting, you know, 10% a year is 10 cents. And so each and every month would be like less than a penny. You know, that's not really worth paying the gas fees. And so what we did was we set it at a $250 minimum, so that everybody can get involved. Everybody has a chance of getting involved in this. And this is, again, this is for you know, money that you're not necessarily using at the moment, and you just kind of want to store your wealth, but you don't want to, you don't want to do it in fiat currency. Bitcoin might be a little bit volatile, and this way, you know, you get that kind of consistent revenue generation, and you don't have to worry about what's happening in the markets, and you don't have to worry about you know, your currency being depreciated or devalued or anything like that. And it's really kind of just opening up access to you know, to a passive income stream that's, you know, that's only until now been available for, you know, for insiders and very wealthy people.
Yeah. So this process then is nothing really new. To your point, folks have been doing this. High net worth individuals and institutions have been doing this ad nauseum for at least the last, I want to say 100 years, however long this has been around. I don't know.
Yeah,
100 years, but at least 50 years, I would imagine. So this really, now you've broken down the barrier and allowed access to just anybody and everybody with $250. What is it then? So I just want to make sure, is this something like I can just say, is this a set it and forget it type of thing? I can put my money in, it's going to sit there, and then I don't have to worry about it, and it's just going to continually pay out this passive income over time, and I just get a yield. Oh, look, I got another payment from my real world asset in the mineral rights. Is that basically?
That's exactly it. Exactly it. You put the nail on the head right there.
Well, it sounds like a no-brainer. No-brainer then. Like if you got $250 you can throw at this, and then you just let it sit there, forget about it, and then you're just going to start getting some payouts. You'll get obviously the more you put in, you're going to earn more back, I would imagine, right? So if I put in $1,000, I'm going to start earning more.
Yeah, absolutely. It's proportional to the amount that you're investing. So yeah, I mean, it's typically around 10 to 15%, depending on the property. And then what the wonderful thing is, when new wells are drilled on the property that you have,
Mm-hmm.
The value of those, so the royalties go up in value, so you're earning more every month, and as a reflection of that, and again, this is up to the free market to decide, right? For secondary market, this is not for us to determine, but the beauty of these assets over doing it the traditional way is that they're now liquid, and so anybody who's investing in these sort of properties and you know, and actually buying the property, if you want to cash out, you got to find a buyer for those properties. You got to go out and sell a physical property, which is not always easy to do. And so these NFTs make it extremely liquid, and also enables price discovery on assets that price discovery is traditionally very slow. And so this basically makes it real time, so that the assets themselves.
Uh-oh. We got a glitch there. Like he's frozen. You froze on me, buddy. What happened? Oh, geez. Right when we were getting to the good part. Oh, no. What happened to our internet connection? Oh, my goodness. The USB cord came unplugged. Somebody check the plug over there. All right. Let's see if we can get him back in here, Mr. Greenspan. His screen is frozen on us. Are you back? Nope. Well, we're coming up close to the top of the hour anyways. So we should probably put a bookmark in the conversation. We'll iron out the technical difficulties and make sure that you got a good USB cord. Are you back? Nope. He had to drop on us. All right. On that note, we will put a bookmark in the conversation and pick it up a little bit later. Mr. Greenspan, thank you so much for coming through. Appreciate it. And we will see you on the X Spaces here coming up for Trading Tuesday. So until then, stay safe, stack sats and hodl. Not financial advice.